With the election behind us and the market stable, it should be smooth sailing for investors to close out the year, right? Well, maybe. In this morning's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us to talk about what could be in store for the last few weeks of 2016. He is with Business Watch producer Kelly Leon in the studio. Mike and Kelly.
Thanks, Peg. Hey, Mike.
Good morning.
So it's kind of an understatement to say it's been a couple of crazy weeks.
Yes.
So what's going on? Where do we stand right now?
Yeah, so really it's just a continuation of the craziness that we've had all year. 2016 has really been a mixed bag for the market, but the last few months have been relatively calm, and that's been a nice break from all of the wide swings up and down. But then we hit the election and, you know, boom,
yeah.
All of a sudden it's off to the races again. So,
yep.
You know, if we just take a step back a minute, and we talked earlier this year about the election and how that once you get past that point, regardless of who wins, the market tends to move higher as you get closer to year end. And of course, we've talked before about kind of the whimsical Santa Claus rally, the name for the fact that stocks tend to do well towards year end and heading into the new year. So, you know, knowing those trends, there was some reason to be optimistic about the market doing well as we closed out 2016. But the expectation was for more of a gradual rally over a several week period, not having it all at once.
Yeah.
So, you know, we'll see how this plays out, but it could very well be that we got all of the anticipated rally at once instead of over a several week period. And if that is the case, it's hard to make an argument that there's much left in the tank for next month.
So where does that leave when we look at the market over the year? Good, bad, what?
Actually, average.
Average.
So
that's a good answer.
Yeah. So, you know, we talked earlier this year about the fact that over the long term, the market tends to have that average return of about 7 or 8% each year. Heading into November, the market was up about 5% for the year, so slightly behind pace. But then this rally over the last week or so has been so strong that we jumped up to now 8% for the year. So right at that average mark, if the year ended today, we'd probably look back at 2016 and call it one of those Goldilocks type years.
Yeah.
The market wasn't too hot, it wasn't too cold, it was right down the middle.
So in the remaining weeks of the year, what should we be looking for? Anything we should watch out for?
Yeah, one big item remains on the table, and that is what will the Federal Reserve do next month? They have their last meeting for the year in mid-December, and it's pretty widely anticipated that they will finally move interest rates higher by one tick. So I say that with a huge grain of salt because it was also widely anticipated that they would have done so in June or in August or in September.
Yeah.
And of course they didn't at any of those opportunities. So to use your word from earlier, it would be an understatement to say that the Fed has kept the market guessing this entire year, and that they have surprised everyone again and again. So the anticipation is that they will finally get around to making their move next month. But we need to keep that in perspective. So this is widely anticipated. The market has had plenty of advance warning. The move of the increase itself should be relatively minor. So in the grand scheme of things, this really shouldn't be a major disruptor for the market. But then again, with the Fed and how the market reacts to them, all bets are off. So you never can tell how the market's going to take that. So we'll go into next month anticipating that the rate hike is coming, but at the same time, we'll kind of be crossing fingers that the market takes it in stride and doesn't view this as a big disruptor.
Yeah, and of course, you'll be here to let us know what happens.
We can follow up.
All right. Sounds good, Mike. Thanks. Have a happy Thanksgiving.
Thank you.